Good morning and welcome to Stock Market Today. It's Thursday, June 13th, 2019. I am your host, Dan Russo, the Chief Market Strategist at Chaikin Analytics. Find me on Twitter at DanRusso_CMT. Stock Market Today brought to you today and every day by Chaikin Analytics. Head over to chaikinanalytics.com/today. Sign up for a free email. Follow along with this show. Get daily stock ideas for you to consider every trading day before the market opens. So U.S. equities were mostly lower in a quiet session of trading yesterday. Utilities, healthcare, and materials outperformed, while energy and financials led to the downside. Treasuries were mostly stronger with the curve steepening. Dollar was stronger on the euro cross and flat against the yen. Gold finished up 40 basis points. WTI crude settled down 4%. So again, your outperformers, Utes, healthcare, materials, and REITs. Underperformers, energy, financials, tech, and comm services. As we get to the desk this morning, futures are up 40 basis points to start the day. Asian markets were mostly lower overnight, though China did buck the trend, actually closed slightly higher on the day. European markets are moving higher this morning. Treasuries are stronger, and the dollar is flat against the major crosses. Gold adding another 30 basis points, and WTI crude is seeing a rebound here. It's up over 3% after reports of a tanker attack in the Gulf of Oman. So let's dive right in to the S&P 500. The June rally stalls near the resistance zone. Now remember, we've been calling 2,900 to 2,950 this resistance zone. Obviously, the top end of that zone coinciding with the recent highs. 2,900 round number. Support and resistance tends to be psychologically important to investors, and we did kind of stall out there. We'll see if we can manage to push through with futures pushing higher here this morning. Support continues to be in the 2,800 to 2,850 zone. I've highlighted 2,800 here. It was those highs, those interim highs back in October, November, and December. Really, 2,800 really a bifurcating mark here. You can see it was resistance, then it was support. And now we'll look to see if it acts as support again should the market continue to pull back. I'm asking the question, will we see a bullish shift in the RSI? That, to me, is the key. We're starting to see signs, and we'll get into this a little bit later, of breadth improving. That increases the odds that we are going to push through to new highs. But again, it increases the odds. Nothing is guaranteed. We want to continue to look for data points that increase those odds. Right now, the next key data point that I'm looking for is a bullish shift in the RSI indicator as well. I'd like to see Chaikin money flow shift out of this neutral to bearish tendency that it's had over the past week and a half. You can see it's oscillating above and below the zero line, currently slightly below. So we want to see momentum improve. With the RSI shifting to bullish ranges, we want to see Chaikin money flow improve to then start to confirm what we're going to talk about, what I'm seeing in breadth a little bit later here in this show. Your market in a minute now. What are we talking about in our note to Chaikin Analytics clients today? S&P 500 rally stalls at resistance. We hit on that. But breadth metrics point to increased odds of new highs. We'll touch on that a little bit later in the show. Global markets continue to improve, and that's a positive for equities. I track 33 different country ETFs, and what I'm looking at is, how many of those ETFs are above or below their 200-day moving average. I'm trying to get a sense of long-term trend, and that number actually ticked up to 20 this week. Had been down in the teens and as low as 12 2 weeks ago. So improvement in global equities shows that there's a bid to equities around the world, and that is positive should it continue. In the U.S., though, U.S. transportation continues to underperform, and as I said, futures do point to a higher open here today. Taking a look at the power bars now for the major indices. Actually saw an improvement in the Dow despite the 17 basis point decline for the average yesterday. 8 bulls to 4 bears. S&P 500 down 21 basis points, slight deterioration in its ratio, but still positive at 115 bulls to 66 bears. NASDAQ underperformed, and in my note today, we highlight the Qs and how they are beginning to underperform the SPY. 21 bulls to 11 bears. Small caps, a little bit of a reversal of recent trends, if you will. Small caps actually outperformed. 435 bulls, 387 bears. Bonds ticked higher, sending yields lower, and they are moving higher once again this morning. And utilities had a nice day, up 1.25%. 6 bullish or very bullish stocks, 3 bearish or very bearish stocks. And according to the Chaikin Power Bar, small cap stocks and large cap stocks are somewhat bullish. Major indexes are mixed. Our stock of the day today Adtran. Ticker symbol is ADTN. Closed at $16.11 yesterday, down 1.23%. Adtran has a very bullish Chaikin Power Gauge rating due to attractive financial metrics, strong price volume activity, and positive expert activity. So every day when we crunch the numbers, the 20 factors, 5 in each of these 4 categories, when combined, they give us a very bullish rating for Adtran, which has a strong trend and is in a strong industry group. So it's the type of name we want to consider owning. Starting our analysis from the bottom of the chart up, as we always do, we can see the ribbon here tells us where the power gauge rating is and has been, and you can see we are on that very bullish rating. At the same time, the stock is outperforming relative to the SPY. So market and model are in agreement. Our dynamic duo are in gear to the upside here. Interesting to me that during the last pullback, the overbought oversold indicator could not become oversold. We now are overbought. Money flow is bullish. We're above the rising long-term trend line. So as always, there's a couple ways to kind of look at this one. I mean, if you want exposure now, I can't argue with being long Adtran. For us, we prefer to wait for an oversold condition, especially with the market near overbought levels as well. I prefer to see an oversold condition to increase my odds of outperforming the market. So Adtran is going to a bullish watch list for me today. I obviously couldn't fault you if you wanted to own it, but it's an interesting name, one to certainly keep an eye on. All else being equal, I prefer it when our overbought oversold indicator is closer to an oversold reading. Now, looking at the sector tracker, the movement of the major sectors over the last 5 days, tech remains at the top of the list, and that is encouraging. Discretionary materials and staples round out the top 4. Healthcare, comms, and energy are middle of the road. REITs, industrials, financials, and utilities are at the bottom of the list over the past 5 days. You know, obviously, we're seeing some counter trend moves as it relates to real estate and utilities. Utilities obviously had a nice day yesterday, continue to be driven by rates. But the bigger picture trend for those groups remains higher. Tech, though, to me, is the group that we really want to see get in gear. It's over 20% of the S&P 500. If tech is outperforming, that's a bullish indication for the market, in my opinion. We want to see tech continue to do well. And speaking of tech, we are going to look at the NYSE Technology Services Industry Group today. Over the past 6 months, group has outperformed the S&P 500 by almost 2%, 1.92. Power bar ratio, which measures future potential, is strong. It has 11 bullish or very bullish stocks and only 4 bearish or very bearish stocks. And it's ranked number 7, so in the top third of the 21 subsectors that we look at. It has moved down 3 slots over the past week. Now, some of the indicative names there, NXPI Semiconductor, NXPI, very bullish rating. IBM, Big Blue, has a very bullish rating as well, but I will note that it is underperforming the market. And Accenture, ACN, a recent idea from Mark Chaikin in his weekly market insights, has a very bullish rating as well. And we're going to take a look at ACN here today because I think there's a couple of ways to think about it. ACN has a very bullish rating, closed at 184.59 yesterday, up 67 basis points, so a nice outperformer. Ribbon at the bottom of the screen. Very bullish stock since February, outperforming the market since late February, early March. Market and model are in agreement. Dynamic duo in gear. Overbought, oversold indicator is the only thing only hang up I have here now. It's closer to overbought, as is the market. But Chaikin money flow has been intensely positive since the beginning of the year. Stock is above the rising long-term trend line. And look at this, 1, 2, 3, 4. Its last 4 earnings reports have been positive surprises. Now, I've drawn the lines here to kind of give you the key levels because I realize there are a lot of different types of traders and investors who listen to this show. And some of you might be breakout type traders. If you're a breakout trader, the setup is here for Accenture, right? This break, call it above the 182 half level, was your signal to get involved. I see some solid support at 175, so you can define your risk reward. For those of you who follow along with our process, who read our notes, obviously you'll recognize Accenture as the type of name we want to own, but we want to own it when it's oversold. Right? So for us, we'd be looking for oversold conditions, all else being equal. Still very bullish, still a strong trend in a strong industry, still outperforming the market with bullish money flow. That would get us excited. But I do realize that there are breakout traders out there who like to trade stocks that go to new highs, and Accenture today certainly fits the bill. Taking a look at what's trending now, yesterday's S&P 500 gainers and losers. Mattel rejected a merger proposal, and investors like that, sent the stock higher by 5.25%. Alexion was the top performer in healthcare yesterday, up 3%. Some positive data out of Eli Lilly, LLY, sent that stock higher by 2.7%. That we will note it has a very bearish rating at Chaikin Analytics. Fox A, no real news to send that stock higher, 2.5%. And EXC went along for the ride with utilities. It actually outperformed, up 2.5%. Loser side of the board, really driven by comments from relating to Lam Research. Lam caught a downgrade yesterday, with the analysts citing some concerns about the recovery in memory. That was enough to send Lam down by 5.3%, but it also took some of the other names levered to memory and memory chips along for the ride. Western Digital down 5.65%. Micron down 5.4%, and Applied Materials down 5.14%. The other name on the board here on the loser side is Halliburton. Halliburton has been one of our poster children for what we call a Chaikin classic bear, and it was down 4.5% yesterday, trading lower. Nothing company specific there, but as we said, oil was down 4% yesterday, so it took Halliburton along for that ride lower. So let's dive right in now. Breadth metrics continue to improve. What I'm showing you here is the advanced decline line for the S&P 500, and you can see over the course of the past week, it did break out to a new high. That is a positive for the market. It coincides with the sharp rally to start the month of June, and it increases the odds, does not guarantee, but increases the odds that the S&P 500 will break above the May highs, especially if this line continues to move higher. And we're seeing improvements across a lot of the breadth metrics that I track. I looked at an 8-day moving average of the percentage of stocks in the S&P 500 reaching new 52-week highs. That broke out of a recent consolidation to the upside. Percentage of stocks trading above their respective 200-day moving average moved back above the 60 level. That's a positive sign from a breadth standpoint. Percentage of stocks above their 50-day moving average back above 50 was at 46% last week, so moving in the right direction. Likewise for the percentage of stocks above their 20-day moving averages. And as I said, there are now 20 of the 33 global ETFs that I track trading above their 200-day moving averages. So breadth has certainly improved over the course of the past week, right? What would concern us would be if the market had this sharp rally in June, but breadth did not improve as well. That would be a negative divergence. Right now, breadth is in gear. Some of the metrics are breaking out through key resistance levels. That increases the odds that the market will do the same. Signs of a rebound in global markets, as I said. We're taking a look at Latin America here today. ILF, the iShares Latin America 40 ETF. And the reason I'm taking a look at it is because a lot of the global regional ETFs that I look at continue to underperform the market the way we look at it in Chaikin Analytics. But ILF has actually seen the intensity of its underperformance waning over the course of the past couple of weeks. And I wanted to show that on a ratio chart here today. ILF relative to the SPY, you can see that this intense underperformance looks like it's beginning to reverse. Now, on an absolute basis, we're above the 200-day moving average, but in all fairness, we're still within this choppy sideways range. And RSI seems to be trying, if I drew the line here, you'd see it broke the downtrend line, trying to shift to bullish ranges. So we are starting to see signs of this rebound in global markets. And to the extent that global markets are moving higher along with the US, that is a broad breadth confirmation to equity strength. So it's something we'll continue to keep an eye on. Here in the U.S., though, transports remain under pressure. Taking a look at the XTN, the SPDR S&P Transportation ETF, you can see trying to rally, but it's below the declining 200-day moving average. Clear downtrend since the highs in September. RSI in the process of shifting to bearish ranges, and on a relative basis, we can see XTN is in a clear downtrend when measured against the S&P 500. And if we take a look at the power bars for this industry group, 10 bearish for very bearish stocks, for 3 bullish or very bullish stocks. ETF does have a bearish rating in Chaikin Analytics, so it's a group that we continue to want to avoid and selectively look for bearish opportunities, such as UPS. Chaikin Power Gauge rating is bearish. Dynamic Duo is in gear. Bearish rating is met with intense underperformance. Stock is currently overbought based on our indicator. And as we can see here, Chaikin Money Flow has put in a series of lower highs since topping out in February. Stock is below the declining long-term trend line. Likely has some resistance at the 105 level. Take a look at UPS as a potential bearish idea. As always, you can head over to chaikinanalytics.com/survival-guide. Sign up for our new product. It's a weekly action plan for surviving and thriving in any market environment. I'm going to wrap it up there today. I will see you back here tomorrow. Have a great Thursday, everyone.